Over here, welcome back to the Pulver Report. It is Monday the 24th. This trading week is the 24th to 20th of October. Let's begin with the risk disclaimer. We understand risk in trading. Please and always use trade capital only. Do not trade with money you cannot afford to lose, whether trading stocks, options, futures, forex, cryptos. You know the risks. Let's jump into the charts. Happy Monday, everybody. Give me a quick AV check if you would be so kind. Let me know everything's coming through loud and clear. I'm going to log on to the other screen. I know we had like a 5 or 10 minute AV snafu last week, but we should be good now. So let's find out. All right. Brad, good morning. Gail, good morning. Chris, good morning. Don, what's happening? All right. Early birds indeed. Morning, David. Nice to see everybody. Okay. So we're looking at the SPY this morning. Pre-market 376.82. We had some currency strength drama last night. We've got some BOJ intervention, but not quite. We'll talk about that. Here's last week on Friday. If anybody is a currency trader trading Forex, big, ridiculous, massive move Friday afternoon. We saw about a 570 pip swing on the dollar-yen cross. Here's your dollar was the strongest of the day, became the weakest of the day on Friday. Here's your Japanese yen, one of the weakest of the day, became the strongest of the day before it started to fade. Now go into this morning's trading. Again, take a look at the vertical axis. Anything over, 60 to 80, reasonable volatility. Anything over 100, fairly high volatility. So we've seen some, 160, 180, 200 plus when we've seen the pound crosses have some really big days. The Japanese yen have some pretty big days. And here we are today. Again, big spike to the downside. JPY comes out swinging with weakness and then a little bit more possibly intervention. We have the pound on top right now, the JPY, the Aussie, New Zealand on the weak side. CAD is baseline, Euro, Swiss kind of pegged together this morning, and the dollar slightly on the upside. So let's review everything for this morning, this week. Major earnings reports this week. We have about 700 companies. If I'm not mistaken, let me go to earningswhispers.com. I think we have over 700 companies reporting earnings this week, and some of the big ones include Apple, Amazon, others. I took a screenshot of it on my phone from good old StockTwits. There's a whole calendar. So we have just notables: Apple, Amazon, Google, Microsoft, Teladoc, Shopify, Ford, General Motors, ExxonMobil, and many, many others. 712 companies this week, to be exact. So that is a lot. Trying to log in here and see if I can take a look at the calendar. There it is. If it's going to be slow, then never mind. We'll come back to that, see if it shows up on the calendar. So 377.06. Let's look at the Market Watch Futures dashboard. Futures up 0.79 for the Dow futures, 0.73 for the S&P futures, 0.40 for NASDAQ futures. Again, NASDAQ futures likely will be led by the big tech review or the big tech releases this week. Investors are braced for a decades-long bear market. There you go. It's that easy. Just be permanently bearish. Problem solved. Just kidding. No, I mean, there's a lot of things that are going into potentially a lost decade, low growth, higher inflation. Interesting podcast over the weekend if you want to check it out. The gentleman at Market Huddle did a great job with an awesome episode. It came out on Friday, so I would highly encourage you to check it out. YouTube.com. Let's find it for everybody. Their sessions, they usually do, they do a show every other week now. And the Market Huddle. I thought last Friday's episode was really good. So right here, the episode was Disrespecting the Tail, Dean Kernett, and just good macro outlook. And also when Dean is done and just the two hosts chat through charts and what they're doing, it's a really informative session. So anyway, check it out, and appreciate everybody being here. For the Pulver Report, let's just go through the routine. So SPY is up a little bit pre-market. We have some big central bank news this week as well. If we go to forexfactory.com, we have looks like a mix in European PMI numbers. Well, mix meaning like French PMI was up, German's down, Eurozone overall down. I know that we have 3 or 4 central bank rate decisions this week. I know we have Bank of Canada, ECB, and Bank of Japan all coming this week. There might be more. So here's Monday morning. Consumer confidence for the U.S. We have CPI coming out of Australia. CPI numbers across the board for all countries this year, especially, have been really important. Here's your Bank of Canada. They're looking at a 50 basis points hike. So another rate raise coming from another central bank. That would be 10 a.m. on Wednesday. They also have a press conference at 11. ECB on Thursday morning at 8:15, 75 basis points. We looked at this last week and there was no forecast. So we're looking for the Eurozone to see if they deliver, again, forecast for 75 basis points. We have US GDP numbers coming out also on Thursday, which would be interesting. ECB press conference with Christine Lagarde. I'm not sure if that ECB press conference or rate decision has been impacted or is being influenced by what's going on with the UK and the Bank of England right now. Because, by the way, I think, let me check cbrates.com. I think that the Bank of England recently raised rates. So here's the UK. September 22nd, they raised rates 50 basis points to 2.25. ECB this week, Bank of Canada this week. The Fed is not until next week. The Fed is going to be next Wednesday, the 2nd. And it's like a 98% probability with the CME watch tool that we're expecting that 75 basis points hike. Then the question becomes, how many more hikes and how much further do they go? So there's your 93.7% probability for next week, Wednesday, December 14th. It's now kind of 50-50. Last week, this was, again, very different. Last week, this was a 75, like 60 to 65% probability that the market is expecting another 75 basis points increase, and then a 25 basis increase in February, and then the pause. The pause was in March. So we're going to see what the Fed does, of course, and it's super annoying. And even with the central banks this week, it's still about the Fed. There's going to be some decent volatility around the CAD crosses, probably the euro pairs this week, but everything could be supported or interrupted or disrupted from the Fed next week on Tuesday, which, by the way, Wednesday, the 2nd of November, which is the week before the midterm election, which is on the 8th. So we are going to deal with some pretty heavy volatility on, the U.S. stock market, U.S. currencies, all the majors, really. So it's going to be a wild Q4 to finish things up. So on that note, let's take a look at the DXY. Let's see if I have some questions here. Moshe, good morning. Marilyn, good morning. Joe, what's happening? Nice to see everybody. DXY, pretty messy from last week. Again, chart alarms are set. We didn't take out the high. We didn't take out the low. Okay, fine. What's next? We'll find out this week. If you're looking at, what's the euro going to do? Watch the DXY. Oh, what's the stock market going to do? Watch the DXY. I'm telling you, the correlation with the dollar for risk assets is insanely strong. So what I mean by that is, if we're going to see any strength in the stock market, we should see weakness in the dollar. If we don't see any strength in the stock market, we will continue to see strength in the dollar. I have these notable levels, 115, 16, 17, 18, 19, and even 120. Those go back to the highs to the early 2000s. Across some of the currencies, we're seeing the dollar yen at 30-year highs. We're seeing the euro dollar at 30-year lows. We're seeing the pound dollar at 30-plus-year lows. We've obviously had some intervention by the Bank of England. We had a flash crash on the pound not too long ago, just a few weeks ago. And I just wonder, the pound's made a pretty substantial bottom. The euro has not made new lows yet. And the JPY has shown some signs of intervention from the Bank of Japan. So those are three major crosses to keep an eye on, because we might start to see that the weight in those may start to shift the dollar over. And again, if the dollar does not take out these highs, then we're looking for dollar weakness. That's going to allow for a Q4 rally. And again, if we don't get the Q4 rally, I'm expecting a reasonable Q1 rally. But those levels are what I keep, banging the drum on. It's 340 on the SPY. It's 240 on the NASDAQ. It's pre-COVID highs. It's any type of capitulation move. I'm looking to be pretty aggressive with options, trying to take some stabs at some long call options on a couple of those indices. All right. Morning, Greg. So we'll be watching. Chart alarms are set. There's the DXY. Here's U.S. oil. Oil also not breaking highs and lows. Chart alarms are set. So we're going to see what oil's made of. The U.S. is dumping 14 to 15 million barrels into the markets. That is suppressing price thus far. I would say that if oil regains $90, be on the lookout for bullishness. All right. I think, with the U.S. essentially dumping oil into the markets, trying to increase supply, and then OPEC cutting supply, that is a game that I don't think the U.S. can win. So it really depends on how OPEC continues to hold their stance. They can say one thing and do another. But at the same time, we're going to see where this floor exists. And right now, the low for the year is around $76 on oil. Could we possibly make a fresh low in oil to see a risk appetite rally with other materials, commodities, the market in general, the stock market in general? Possibly. But the way that price has been pretty compressed, this, even on this little correction here, has been slow. We haven't taken out the low. We haven't taken out the high. So I would not be surprised if energy gets bid, that energy can rip pretty fast. A way to watch that would be watching U.S. oil, watching UK oil, also watching XLE, which will be influenced by markets this week. We have ExxonMobil. We have other earnings companies. I am long on XLE with a 11.25 call. It's the expiration. I'm doing the 95 call. I paid 80 cents for this. Last week, it was up like $1.20, $1.25. So pre-market's around 86, 87. I'm curious what this is paying today. Probably not going to start taking profit on this until it hits 90 bucks. If price hits $90, I'm going to look at the call. It should be worth $6 or $7 for me, which would be pretty good considering it's an 80-cent debit. So if we can make some profit on XLE, that'd be great. If we have some strong earnings coming out of energy companies this week, that'd be great. Companies like Apple and Amazon reporting earnings. We will see what their forward guidance is. Apple, again, has not broken the lows, which is interesting considering the SPY. This is the June low in Apple, but we did not break the June low in Apple like we did in the S&P. Take a look at Amazon. Amazon, did we break the low in June? No, we did not. So there is a chance where we might see some hidden bullish divergence here. And if earnings come out pretty solid, pre-market's higher, I'm going to find out where's my earnings whisper. It is, it looks like the website's not loading. I was going to look to see when exactly, what day, before market, after market, when is Apple's earnings, when is Amazon's earnings, when are other companies' earnings. Let me see if I can find StockTwit's earnings calendar. If I can find the link to that. StockTwit's company data and reports. There we go. Okay, so here is a list. I'll get rid of this. So like I said, 700 plus companies, big notables. So Tuesday, Microsoft, Google. Wednesday is Ford, Meta, Apple, Amazon, Intel. On Thursday, ExxonMobil. So those are some of your notables. So yeah, I mean, whatever. It's a whole week of trading, and we have earnings reports. Again, this is right in line with the last full trading week of the month. We wrap up for Halloween. So who knows what type of trickery the market will be up to. And we kick off a brand new month next week and a Fed rate decision on Tuesday or on Wednesday at 2 p.m. So I also wonder, do we have non-farm payroll on Friday next week? That'd be kind of an interesting double whammy, but let's find out. Let's see what next week gives us. So next week, Wednesday, FOMC right there. Expected to be 75 basis points. Thursday, we have a Bank of England rate decision. We'll see if they raise rates again. We have the PMI numbers coming out, the ISM numbers on the U.S., CPI for the Swiss. And we do have non-farm on Friday the 4th. So, all right, we're really cranking up the volatility here with some expected news. And that's why we're here, right? Okie dokie. Let's see here. Not sure what that question means. Footprint charts? Are you just looking at technicals? Other energy companies looking to fill oil gap? Possibly. I'm curious. I mean, if ExxonMobil is a big one, Chevron, BP, Rio Tinto. I mean, there's some big ones. Cameco is another one. Look at Exxon is at previous highs. What's going to be interesting is perhaps, at this technical level, we might be kind of maxed out here from a technical side on Exxon. I mean, obviously we can break and go higher. I mean, there's no reason this has to stop necessarily. But at the same time, this is kind of what I expected XLE to do. I expected XLE to come back and test this high. Okay. And if XLE does test the high, I'm looking for it to drop. So, ExxonMobil might be kind of the leading energy company, and others are looking to catch up and possibly see those gains as well. But again, I mean, I would imagine earnings for energy companies has to be pretty steady. It doesn't necessarily matter. I mean, Apple could be mediocre or Amazon could be mediocre. They could also have a little bit of a warning to retail consumers out there saying, hey, spending is down, orders are down, blah, blah, blah. We're bracing for the worst. And sentiment as a whole could bring, this stock price down regardless. I mean, we've seen companies also beat top and bottom line estimations and still drop over the last couple of weeks with earnings. So again, I'm watching. I think ExxonMobil should show, beating the estimates on both sides. But from where we are technically, I could see us also, putting in a top and maybe even looking at some, I don't know. I'm also, I'll talk about this in Equities on Man this week, but possibly a bear call spread, maybe doing like a 108 or 110 bear call spread. If we pop up on earnings, look to fade that back down. So we can have a conversation around that this morning. Yeah, that's fine. Email me, cpulver@markettraders.com. Okay. All right. So what else? We did dollar, oil. Let's go gold and silver. Gold and silver again. Chart alarms are not being activated. That means we're stuck for right now. XAU USD. Come on, charts. Okie dokie. Well, that doesn't want to work, I guess. There we go. All right. 1648 on gold. It's all about the dollar. If the dollar makes a new high, expect gold to make a new low. This also is setting up for a potential falling wedge. We could make a fresh low, but we could rip off that low. I was looking at I have some credit spreads spaced out on gold. We traded GLD and SLV. We have some credit spreads spaced out through the end of the year and into Q1 of next year. And I am looking for a dollar correction, and I think the dollar could correct in a big way. I'm not saying reverse, but I can say correct because it is long overdue from a technical side. But anyway, gold has not broken recent lows or highs. And so I continue to watch those chart alarms to see what is the dollar doing, what is gold doing because of that. Silver. Here's silver. Have we broken the highs or lows recently? No, we have not. Watch the dollar. Silver is another one in the bigger picture. I would like to be long and stay long. I think the charts look great. I think silver is also inexpensive compared to gold, obviously. And if we can hold these areas here, hold this low, even if we form some corrections, I think gold or silver has the ability to get back up to 29 to 30. We may even hit some symmetry here into the mid 30s. We also might, see the dollar maintain strength through the rest of the year because nothing's getting better with inflation, and silver drops because the dollar gets stronger. But again, going into Q1 of next year, I think that's a great looking trade on silver. The lows around $14. We had COVID crash lows around $12. I will be looking to get long and pretty aggressive down here on SLV. All right, Bitcoin, we're struggling to break 20K. We're trading at 19,346. A risk-on rally, weaker dollar, bullishness in the equities market gives a little lift to Bitcoin. Perhaps that's enough to lift it up over 20K. The good thing about this right now is because we're not breaking 18 to the downside. If we break back above, let's say 21,000, I think there's room to rally up towards 25,000. So, any crypto traders out there, not so much hodlers, I'm talking traders, 21 to 25 is a nice little return. That'd be about a 20% return. I think that can get there pretty quickly, but be aware of a potential range as, more regulation and a lot more kind of sentiment repair is required on crypto. I mean, that's what we're facing right now, right? We just have like sentiment exhaustion. I mean, everyone thinks like it's full on recession. It's going to get worse. There's warning signs all over the place. So I think the amount of transparency in the market is, I just think it has so much bearish sentiment baked in and built in that it's hard to really see a sustainable anything. We've been slowly dragged down by the bears. The bulls come in and they have these big explosive days and everyone gets all excited, but those quickly get faded. So just be careful. Don't allocate all your cash thinking this is the bottom. That could be like the worst choice. Something else we probably need to watch is this. This is the 30-year bond yield. We're at 4.35. This has been going straight up. I think is it GB 30-year? Okay. I want to do this. So if you check out that Market Huddle episode, the host talked about this, and I think this was a really interesting discussion. So they were talking about the bond yields for the UK government, this little run and in this little run, they were essentially saying, you know what, before the BOE stepped in, this is where the US 30-year could be right now. If the Fed is not careful, we might see something break by the end of the year. Again, I think something that breaks, puts in a top or a bottom, but it's not going to be pretty. In fact, it's going to be awful, right? I mean, think about this run. I mean, let's look at this from a percentage basis. We went from, let's say that we topped out here around 3.4 and we ran another, 47% higher before the Bank of England stepped in. Now, the Fed can say they're going to tighten all they want. The Fed can be hawkish all they want. But if we have an insolvency problem, they're going to step in and save it. And it's not going to be the permanent solution, but certainly something that comes in and overrides the current narrative, right? So again, this isn't me saying that this has to happen or is going to happen, but it seems like if the Fed is not managing the situation better, then we could see if you look at every U.S. yield, the 1 year, the 2 year, the 5 year, the 10 year, the 30 year, you look at bond prices, they're just getting smoked to the downside. In fact, we have a positive correlation, which is rare, right? Your positive correlation shouldn't be the case. If you have equities going down, you shouldn't have bonds going down. This is chalking itself up to be one of the worst performing years for the 60-40 portfolio. Now, interesting note, that positive correlation back in 1987, before we had the big October crash, that was positively correlated, and then it broke, where the equities market continued to go lower and the bond market ripped higher. So we might start to see a disconnect here in the next little bit. It could also be because of a kind of a Fed that smashed down our throats the next couple of months. I mean, from the 2nd through non-farm payroll on the 4th, through the midterm election on the 8th, through December 14th, the last rate decision of the year. Where's the Fed going to be at? Are they moving the target? I don't think they're going to change the narrative or the language, but I think that we're going to see how the market starts to price things in. So all I'm saying is, the Bank of England was tightening, and what did they do here? They stepped in and saved it. So if we go to the US 30-year and you look at this chart from a higher time frame, just think about this. Does this look broken right now? Not yet, but what if we go up another 40%? I mean, this looks pretty darn broken. If we have wave 1, 2, 3, 4, this is a wave 5. If we went up another 40% from there, wow, we're talking, we'd see the 30-year up to, 6.5%. If I'm just doing that comparison move. I think the Fed would probably do something, because that's going to be ridiculous. That type of 40+% move, you look at the TLT, that's the 20-year bond price. This is down to fresh lows. I mean, look at this. It's ridiculous, right? Wave 1, 2, 3, 4, 5, a little hesitation there, but still just plunging. This certainly looks like capitulation, and I don't know where this gets picked up. I don't know how this changes. Look at how many weeks in a row we've seen these bond prices dropping. A lot. It's pretty crazy. So all I'm saying is, this is the type of stuff that we're watching closely, and the reason why is because something's going to break. Whether it's the bond market, whether it's bond prices, whether it's yields, whether it's the dollar, whether it's currencies, whether it's the stock market, something is going to break, because these correlations are so wacky right now that they're likely unsustainable. And so that snapback, that reversion, that flash crash that could be coming, just know that we're looking for it. Hopefully it's something that we can survive and profit on. Hopefully it's something that we're positioned for. This is why we're trading lots of options. We actually have some exposure on TLT. We have some exposure on IEF in the trading room. So we do have some credit spreads running. We are long. And I think on this one, it's like a 95 by 94. We're at like the 100 by 99. So there's all sorts of stuff that we're watching. But there's going to be big implications and consequences literally the next 2 months. I mean, November, December, it's holiday trading, should be notoriously bullish. But there's a lot of things that have to come to kind of this crescendo and apex to figure out where this market's going to finish by the end of the year. And at the end of the day, all I'm looking for really is, what's the stock market going to do? Most of my trading in stocks and options is in stocks and options. I have some exposure in bonds. Obviously, I trade currencies. I'm hodling for crypto, so that's not really a big deal, but it's impacted by risk appetite. So I'm curious, and we beat this up every day in Flex and in Equities on Demand. Are we going to be here by the end of the quarter, or are we going to be here first before we get a relief rally back above the June highs? Because we haven't had chart alarms going off, this is why I'm watching. I mean, it really is a 50-50 trade in the market. It has to digest what the Fed is going to do. So do expect a lot of volatility. Do expect a lot of moving and shaking. And hopefully you are positioned accordingly. Hopefully everyone out there is not super exposed and super cash poor. You have cash and dry powder at the ready to deploy as needed. So that's what we've been trying to do. Okay. Who the heck? Great. Got scammers on here. Let's do. Okay, hang on a second. There we go. Okay, morning, Herbert. So any questions? We can take a look at a couple of currencies, but like I said, a lot of chart alarms haven't gone off. We can take a look at the dollar yen. Right now, dollar yen trading at 149.20. We've now had 2 interventions in the last month. Okay, right there was BOJ intervention. Right here last Friday, yes, I mean literally a couple days ago, was a big candle for some intervention. Again, what am I watching? I'm watching this high. I'm watching this low. Right. So now we're trading right back inside of it. The market's going to figure out, are we going higher? Are we going lower? Is the BOJ going to speak up and be more vocal? Are we going to see price over the next couple of days contain these highs, not break them, start to drift over here, and then possibly take out the lows? We still have an impressive bar count on the daily time frame that I'm after. We still have lows over here that I'd like to see if the market can make a correction and challenge those lows. So I'm still hanging on to some of those dollar yens. I did get filled around 150. I think my highest entry is 150. So I was up a decent chunk. I was up like 400 or 500 pips in that trade, but I didn't close it. I'm looking to see for more downside targeting this EMA. Okay, Aussie dollar. Sure, we'll take a look at Aussie dollar. Aussie dollar, what was up last week is getting pushed back down. We're still not on the right-hand side of the trend line. Look, I mean, anything that has a dollar in it for currencies, you have to watch the DXY. I mean, if the DXY is not making a high or not making a low, it's hard to make a decision on where we're going. Aussie dollar, I think that we need to put in a low at some point. I'm looking for a correction to come on the Aussie dollar, but where is it? In my opinion, if we break this trend line, we have a nice little pocket back in here post-COVID, which is around 6,000, 0.60. So that's a possible low that could get carved out, but we also might come back and retest the flash crash low from 2020, which is around 56 to 5,500. So I'm not putting in active buy positions. I will say that when I do want to buy it, it's going to be down here. That's going to be where I'm willing to test. I'm looking for confirmation over here. And where am I trading it back to? Probably that breakout point right around 6,600. We have this high. We have this low. I'm looking at that 50% midway or that midpoint. Right? So let's say we come all the way down to this flash crash low and we bounce. I would look for that return right there to the middle and I would be happy. If it goes all the way up, okay, fine. If it comes all the way back down, okay, fine. But I think we get to the midpoint. So I'm looking to see around this COVID low. If we retest it, I'm looking to buy that. New Zealand dollar, same thing. If we come back to those COVID crash lows, I am buying, but I'm looking for daily trend line breaks for more confirmation to add to that position. Okay. All right. Let's see. Aussie CAD. Aussie CAD can't maintain its, I mean, we have some, I'm looking for a bid, right? Same thing here. Where would I buy Aussie CAD? My next level, I did take a small position in this pocket. My next position is down here at the COVID lows. So, I mean, is it here? Is it more capitulation? Then we put in a bottom, then we have a nice trade right back to the midpoint. It's very possible. So Aussie dollar, Aussie CAD, similar structure. Aussie dollar might be a little bit more volatile than the Aussie CAD, but still, that's the type of trade I'm looking for. I will be looking to buy. Let me go ahead and clone this. I'll be looking to buy in this area here. So do we come down into this flash crash low? If we do, looking to buy that. Aussie Swiss, same thing. A couple of big pockets I'm looking to trade. Aussie yen, staying out of this one for right now. We took some profit on Aussie New Zealand. That trade is done. CAD Swiss. A little range bound. I'm looking to see with the BOC this week on Wednesday at 10 a.m. Does the BOC raise rates? Does the market like it? Do they get back up towards 75 and change? Do we also see oil prices going higher? If we do, we should see a lift in the CAD. There's a big pocket back here from a Swiss National Bank news around 76 to 76.50. I'm holding long into this little consolidation zone. So I did not hold my 71.25 entry. I took that profit a couple of times. I haven't had a retest. If we get a retest of 71.25, I'll buy it. If we start to break and go higher, anything around 75.50 to 76.50, I'm taking profit on my longs. So I will be watching CAD Swiss this week if there's enough news to drive it higher. Chart alarms are set. I've got a chart alarm set right here at the highs at 75, lows at 71, and the pocket at 76. CAD yen, resistance off the high for right now. Swiss yen, still some indecision off the BOJ candle from a while back. We had, this weekly chart. This goes back now 5 or 6 weeks from that first BOJ intervention, and the Swiss yen hasn't broken that level. Euro Aussie kind of all over the place, but it's favoring bullish trends right now. Euro CAD stuck. I don't like this one. I'm actively watching the Euro Swiss. This one's kind of sneaking up on us, making some surprise upside, which I'm not complaining about at all. And I've already, probably bored traders to death on how we've been trading this one. But since we did take out this high briefly, I'm looking to see if we have a pullback first and find some demand levels down here around 97. If we find some support at 97, I'm looking for this to swing up and finish this move into the pocket around 103 to 103.50. I will be I want to take profit at 105 or higher, but realistically, I will probably take profit at 103.50 to, probably 103.50 is my target. But hopefully there's more upside. I'd love to see this thing come back and challenge 105. That's another, it's a big difference with a position trade. A position trade, you can grab another 100 net pips on all positions. That's a big difference. But nevertheless, I'll still be watching that 103.50 level. Euro pound staying out of, Euro yen staying out of, Euro New Zealand, similar to Euro Aussie. Are you kidding me, dude? That son of a gun. Man, that really sucks. I said our stop loss was around 71. Fudge. I closed this out with a chart alarm last night. That's annoying. Well, that is annoying. So anyway, we were long at 71.75. Traders and Flex are still hanging on to it. Great. You're up 175 pips. I closed out for a small loss. That's so annoying. But I wanted to be bullish on this support level, and we got it. It hit right off the monthly pivot, and fudge. That sucks. Euro dollar. Watch the DXY. Chart alarm set above and below. There's one at the lows. Let me set the one up here around 1.00, just above parity. Man, if we can get a nice clearance above parity, I do think that dollar can rip with weakness, and we'll see a big squeeze and a just a big recovery. It could be. The daily bar counts are really high in a lot of dollar crosses. The JPY, especially the Euro dollar, the DXY, everything. So we could see a really fast move. And again, all it would take is something to get it up here. We get into this open space. I want to be pretty aggressive on Euro dollar there. We get an open space on pound dollar, heads back to 1.20. Dollar yen hopefully heads back down towards 135. Pound crosses, a lot of intervention. Be careful on the pound crosses. I'm looking for pound CAD to continue to go north. Pound Swiss, looking for that to break some highs as well. Pound yen, be careful on this one, although the 168 to 168.50 resistance is holding. Tons of volatility, so just be careful on that one. Pound US dollar, we may be putting in a bit of this because there's no left structure. This could be a cup and handle. We could have some consolidation in here, but I'd like to see if we can get back to 120 on that pound US dollar. So chart alarms you can see are set way up here towards 118 to 120. Let me set one here at 115, and I'll set 109. Let's do 109.25. And this is a lot of times what I'm doing when I'm trading. I'm just setting chart alarms all over the place, so I know that even if I'm not at my computer, I'm aware where things are at. So 105, and then we had our flash crash low around 103.75 right there. Okay. I wonder what drove the dollar 30 years ago when the price 90s. Probably post 87 crash and 90s growth. I think 90s growth drove the dollar. It was an interesting environment. I'm telling you, listen to this. It's a 2-hour episode, but give it a chance. Watch it at 1.5 speed if you want to. But the environment we had back in the early 90s, we had the 10-year rate at 9+%. We had inflation hovering around 4%. Complete opposite of what we're in right now. right? We're coming off of 0%. We've been at 0% interest rates for a long, long time, and now we have 10% inflation. So, you know, there's obviously the stories of what Paul Volcker did and raising rates to, you know, 15, 16, 20%, crushing the markets. Inflation went from around 10% back in the, you know, the 80s, 70s and 80s. Inflation was around 10%, and it took 2 years to get down to 3%. Now, obviously, that's a dramatic move. Is this current Fed trying to do the same thing? We have, you know, 8 point plus inflation. It's very slow coming down. Do we have to raise rates to 10%? Do we have to raise rates to 15% and just absolutely destroy everything? Maybe. I don't think so. I don't think that's going to be a legacy that I don't know. I mean, if Jerome Powell's legacy is I want to stop inflation in 2022, then maybe that's what he has to do. But that certainly isn't trying to navigate a soft landing because, like I said, these correlations are so chaotic that something's going to break. But anyway, to see what drove the dollar 30 years ago, I'm not sure, but it probably had something to do with rates coming back to normal and getting things back in line and starting to see a growth cycle again. Because essentially these growth cycles start at the bottom, right? Growth cycles start after, you know, possibly a big reset, possibly from a crash. We certainly could be heading that way. Aussie CAD, New Zealand CAD, also waiting for some trend lines to break here. New Zealand CAD trying to position at some lows. New Zealand Swiss, I did not get filled on my pending buy at 53.50, but I'm looking for it. This is also the larger trend line I'm looking for. New Zealand US dollar, chart alarms are set, trying to see if this can get a nice big squeeze to the upside. Again, watch the dollar. We start getting a rip on this one. This one has a lot of room to recover as well. So Aussie dollar on a trend line break, New Zealand dollar on a trend line break, those could be looking pretty favorable. This may even be setting up a bit of a head and shoulders here. So we break the neckline. I want to make sure I'm holding that long. Dollar CAD. So we haven't hit 1.40, but we were close. We were at 39.76. There's a lot of noise up here with BOC this week on Wednesday. I do wonder if we end up maybe poking 4,000 and then dropping again. Or if we don't hit 4,000 because maybe it's all about energy prices and the BOC raising rates ahead of the Fed next week, that we just start to see the dollar CAD come back and rebalance towards 32. I do have a couple short positions in 33.50, 3,300. So if it gets back to 32, I'll make sure I'm taking my profit there. I will be also assessing this 4,000 handle, looking for rejection. Dollar Swiss, we took a hedge on this last week. We're long on dollar Swiss. If the dollar is going to stay stupid, stubborn, and irrational, then we're going to take dollar Swiss up into 1.02, 1.03. Dollar yen, BOJ intervention last week. We're going to see how this day unfolds, how this week unfolds. Do we take out the highs, take out the lows? That's what we need to watch. Okay. All right, everybody. I'll let you go. Take a little breather. We'll be back on Friday. It's nice to be out here in the mountain town of Heber City. I just packed up and took the 3-day trek, so I'm out here now for a while, and business as usual. The only difference in the flex room is we've bumped the trading times. We're starting at 8:30 Eastern time, 6:30 Mountain time, and Equities on Demand stays the same. We'll be back here on Friday for the youtube.com/Chris Pulver channel. Pulver Report, 9 a.m. Eastern time. We will not have any bonus sessions this week. I'm going to plan on a bonus session. We'll do a non-farm bonus session on Friday, the 4th of November, and we will do an FOMC bonus session on the 2nd. Okay, so we'll have a couple bonus sessions sprinkled in. I'll likely do them on the YouTube channel so everyone's has access and can join. But traders this week in the rooms, I'll see you then. Flex traders on the new schedule, half hour different. We're starting at 8:30 Eastern time now instead of 8 o'clock. And I will be slowly and surely getting into the new place this week and settling in. It's going to take some cleaning, little TLC, and some basic furnishings. But the good thing is it's super close. It is literally a 5-minute drive to the office. So no big deal. All right, traders, thanks for being with me today. Nice to see you. Happy Monday. Let's have a good week trading. See you in the trading rooms. And see you back here on Friday for the Pulver Report. Okay, take care. Bye.